We're witnessing a recurring theme, which is in these crypto markets, and that is continued bleed, right? And a lot of people are coming to me asking what they can do with their portfolios once they're down 20, 25, 30, 40, 50% down. Should they sell out of their positions? Should they buy more? Should they rotate their coins? What should they be doing? We're going to have a look at that and a whole lot more in today's show, because the market does continue to bleed and chop people in and out. Make sure you smash the like button, hit the bell notification, and subscribe to the channel, and let's get straight into the show content. There is a lot going on in the markets despite the boring price action, and this is where the major opportunities are usually found, right? They're not found during the exciting times. That's usually where you want to be looking to sit back, ride the wave, and plan your exit. It's times like this where you find the big opportunities. So we're going to have a look at that and a whole lot more. The hourly on the Banter Bubbles over here in the top 100 coins is down. Top 200 also pretty much most of the coins down. Top 300 down. So for the most part, the market does continue to suffer at these levels. And part of the reason why is if you have a look at the Magnificent Seven, which is going to be the top 7 stocks in the S&P 500, erasing $550 billion worth of market cap. NVIDIA on track actually for the largest daily drop since April 2024, and just showcasing the massive amount of volatility. It's not only crypto-centric, right? The rest of the markets are also pulling back at these current levels. There it is, NVIDIA, massive price drop over there. And part of it is because they say, well, there was a subpoena that came out from the DOJ, which went out to NVIDIA, but NVIDIA actually says they didn't receive an antitrust subpoena from DOJ, and it's just FUD. So the question is, will the markets bounce back today? Well, it depends. I guess NVIDIA holds massive weighting when it comes to these markets. And if you look at this drop off over here, was 279 billion, which is the largest single day decline any company in the history of the world has ever seen. It's bigger than the market cap of 474 companies in the S&P 500, which is absolutely enormous. And to give you some perspective, well, if you look at the total market cap for others, which is going to be, if you go onto CoinGecko, it's going to be all of the cryptocurrencies, excluding the ones that are in the top 10 over here. That is what others are. That's sitting at 180.15 billion. And again, if you go back here, 279 billion wiped out. So to give you some perspective, if we were to add that amount of market cap that NVIDIA wiped out in just one single day to the others' market cap over here, well, that would take us pretty much to the prior highs, which would bring it up to 460 billion. Now, price is still within this timing sector that we've been looking at, where we're looking for a major cycle top to occur 407 days from now. That takes you some point into October 2025. So a whole lot to look at. Again, putting it into perspective over here, that wipeout is just shy of the entire market cap that Ethereum holds, which is absolutely wild when you consider that Ethereum is pretty much, the internet of cryptocurrency. This is, of course, the project or the layer one that holds the most amount of total value locked and the most amount of projects building on it. And that alone, as crypto as a sector, is still not even close to the market cap of NVIDIA. Never mind even the market cap that NVIDIA just wiped out in one single day. So there's your NVIDIA chart. It could potentially come down still about 14.7% more, pretty much meaning that it's going to wipe out another $270 billion worth of market cap in order to get down to the key level over here, which is going to be 90.75. We'll have to govern this chart as it plays out. Remember, you got your range lows, you got your mid range, and then you got your range high. Theoretically, where price is capped right now at this 106 is going to be your range quarterly. So an important level to hold. Failure to hold that level just means that it's going to come down 14.7%. And then I do believe this will be a strong range low level that probably holds and leads into the next major bounce. You're also seeing Coinbase over here, which is currently threatening this upsloping trend line. This is a very key level because it's going to be pent up liquidity underneath here. If NVIDIA comes down the Magnificent Seven gives up more of its gains, putting in a deeper correction, then you can expect Coinbase is probably also going to break this, and that could send Coinbase down 29%. Just understand there's a lot of volatility within the markets at the moment, stock markets included. So these wild swings happen both to the up and the downside. When you go for these V-shaped recoveries, once we saw the yen cash and carry trade unwind on the Nikkei, and the Nikkei started to come down, we started to get a V-shaped recovery out of there. That's what brings this volatility into the market. So Coinbase could potentially, if it breaks this trend line, come all the way back down to $116. So keep your eye out on that target. I think a lot of people are going to start to get stopped out over here on Coinbase that have tight stops underneath this previous candle, which was an obvious area to bid, at least for the bounce over there. Stops raised into break even, some hanging below there, and that's going to be liquidity ripe for the taking. Another at least stock that I'm looking at, not coin, but stock, is Tesla, right? Tesla, following this pattern over here, I do think for the long term, Tesla is going to be a great buy if you can start to accumulate in the right zones. We've been eyeing out this one for a long time over here. This was a beautiful area to gain an entry. You had the top of the parallel channel marking the lower highs, and you had the lower lows over here, and then you had that inflection point coming in line with the range low as well as an upsloping trend line. That was the perfect buy, pushing up over here. So I do have a lot of lines on this chart because it's still trying to find its trajectory, right? That's the reason for the lines over here. At the end of the day, we're looking to bid in the areas with the most confidence, which means if Tesla does come back down and wick kind of through this region but starts to show support over here, we'll have double confidence, one with the upsloping trend line, two with the middle of the parallel channel that's been governing this price towards the downside. And we will observe, does it manage to hold that region at about 145, 150? I think that would be a decent zone to accumulate some Tesla. Now, why are the markets experiencing some volatility? Part of the reason is because of the US JOLTS numbers, which came out. You can see over here, the job openings fell to 7.673 million. It was estimated that it would be 8.09 million, and the previous was 7.9 million, basically showing you that there is weakness within these markets, right? The labor market is starting to show signs of cracking, and the total job openings have dropped. And consequently, because of that, we are seeing a shift within the sentiment within the stock market, and we're also seeing a shift in the probabilities of what the Fed will cut the interest rates by, and that's something that we need to have a look at. They can probably still cut for 25 basis points, and it will be okay. It might bring some stability, but it's being repriced in now and jumping from 25 over here. This was the 25 basis point cut, 55%, and now 45% chance of getting a 50 basis point cut, which is a double cut, right? We saw that the Bank of Canada cut by 25 basis points, and oftentimes these other countries and nations cut rates first. The US tends to follow, which means the probability is essentially right now sitting at 100% chance that they will cut. It's just a question of by how much to try and gain stability back into the market. But these numbers and probabilities could fluctuate because remember, there is still unemployment, or at least non-farm employment change data, which is going to be coming out on Friday. That's going to be a big one, massive one coming out on Friday at 4:30 p.m. at least my time. I think that should be sometime in the US market open for you guys out there that are not, in central time zones. So we have a lot to look at. We're tracking as well the DXY. Remember the DXY, when it does break down, which is something we've been looking at. I'm going to go into the granular time frame. When that does break down, then you typically see those parabolic advancements within crypto and the stock market. And a lot of people are forgetting where the DXY is at. So this is just to showcase the previous times when it broke into the red zone down here. You lead to that final blow of top. You break into the red zone. You lead into the final blow of top. And if you have a look at it right now, well, this is in a downtrend, right? So it's lost the key levels that we've been outlining for months, which was most notably between this 103 and 104 region. Broke below that. We broke the upsloping trend line over here. We've now created a new swing low, a lower high, and we're looking for continuation of the breakdown. That could be one thing that may save the stock markets. We did get stopped out now in profit, of course, on our Prime XBT long trade. Remember, we took the trade over here. We raised our stop loss trailing alongside price, and we left it below the prior 2-week candle low, which was most notably coming in on this white line over here at 5,556. That trade has now been stopped out in profit. The gold trade has probably also been stopped out. I'll have to go back and double check on that. But with that being said, is it time to panic? Is it time to panic within the markets? Well, the simple way that you can mark out these levels is have a look at the exact low over there, mark it off to the recent highs, and pay attention to the mid-range level, which is going to be that 50%. As the stock market pulls back into 5397, that's going to be a key zone where you want to see support held, and that may be a new opportunity to start to build the next long trade on Prime XBT. So if you don't already have an account and you want to get ready, you want to take these trades alongside us, you can see the MACD is crossing towards the downside. We'll probably come down a little bit more into that mid-range level, and then we'll start to pay attention for the bullish cross and the MACD moving back towards the upside. Use the link in the description below. You can claim up to a 20% deposit bonus on whatever it is that you deposit, or you can opt for the 25% discount on trading commissions. Now, this is only specific to my show, so please use that link below. It's a special offer that I arranged with them for you guys. Go through to Prime XBT, sign up. Remember, you can trade crypto, stocks, commodity, forex pairs, gold. There's all sorts of things in here. Silver, Brent crude oil, forex pairs, everything is in there. So let's continue. Let's get into crypto. That's the stock markets. That's the traditional markets. That's the outlook that we have. Now, if you have a look over here on Bitcoin, using the Gaussian channel on the high time frame, this is a trend trading tool on the weekly time frame. You can see the upper band over here is going to be important support when price does eventually come into that zone. Now, the interesting thing is if you mark it off where that upper band is, so we're going to mark off that upper band over there, and we're going to run it across the screen. Well, what do you see over here? Well, this is clearly a major level of support, right? And what is that price level coming in at? $52,000. This was where price was previously capped before leading into that big expansive candle onwards and upwards. And then we slowly started to bleed out into that zone. We did wick through there, but no body candle closes below. And then also, you guys know it, I often teach about the inefficiencies within the candles, and you can even get that from the wick. So if you measure out that wick, well, currently the 50% of that wick is coming in at 53,823. So could you see price pull down, hit that level, and start to bounce? It is very, very possible if we do have continuation of this bleed towards the downside. Watch for that level. Keep in mind, each week, this Gaussian channel's upper band will be rising. So in a couple of weeks' time, it's actually going to meet up pretty much exactly with that zone. And again, if we run it to the left side, well, you can see there is still strong support over there. So I think that's an interesting area to keep in the back of your mind's eye as we watch price potentially follow cycle 3 and cycle 4. It looks most similar to what we've seen in cycle 3, which means we're halfway through this bull market cycle. I actually read all the comments yesterday in the YouTube video following the show, not the live comments, but the ones following the show. And I couldn't believe the sentiment. It looks like at least 70 to 80% of the viewers, at least that commented, believe that we're going to $10,000 to $12,000 Bitcoin. If you don't believe me, go back to yesterday's show, click in the description, or at least in the comment section, and go and have a look. Let me know after this show as well, what are your thoughts? Drop it in the comments. Where are we going to next? Are we halfway through the cycle, or is the cycle top in? Is it all over? Let me know in the comments. I would love to reread following a call to action like that to see from a broader spectrum of people what you actually believe will be happening within the rest of the cycle. Because the way I view it is we're still following the timing factor, which is 546 days from the halving cycle to the all-time high, and we are still putting in the massive bull flag over here, waiting for the 5th and final wave towards the upside for Bitcoin, coming off of very, very low volatility, as can be seen over here on the Bollinger Band with percentile recontracting in, and we'll get a deeper recontraction, which means even low volatility if bulls can slowly start to reclaim some key levels, and that key level remains the $65,050 level. Break above the prior candle highs on the weekly time frame, reclaim the 21 EMA, and that will be the first signs and symptoms of that breakout, right? Otherwise, on the daily time frame, this is the outlook, waiting for price to either come down into that 52 to 53K level, or alternatively break above the 65,050 level, and also break the downsloping trend line, reclaim that level. Right now, we're still sitting in no man's land in the middle of nowhere, just like we have been for the last while. We only had actionable trades on a higher time frame when we came down into this level. And for those who were in whale room, you'll remember we were buying at these levels, which means that theoretically you had a massive move from the bottom to the top over there. About 26% on Bitcoin alone. Altcoins did in the region of 2x, right? 2 to 3x, depending on which ones you were in. And now we're back in the middle of no man's land. So it means we wait for price to come here, or we wait for price to break above here. For those of you who are just listening in, when I say here or here, I mean 52,000 or break above 65,000. In the middle, there's not much else that we can do. We can see over here outlined in whale room as well how price rejected at $59,000 off of the 50 EMA on the 4-hour time frame, governing that trend towards the downside. And as you look for price to get into one of these zones, most notably 52 or above 65, you can continue to monitor that trend. So that would take price from that level down 10%. Currently, since we gave that, it dropped as low as 6.64%, and to current price action, given the recent little bounce, we're about 4.5% from the signal over there. So simply just waiting for that. It's either that or you break above $65,000. Now, if you are looking to trade these markets, by the way, and this is specific to those of you out there who are whales, if you're a whale in the market, go through to the link in the YouTube video. It's not only specific to whales, but this bonus would be for whales. You can still claim a bonus, but if you are a whale, this is a Bybit VIP campaign specific to those users who have $100,000 or more. You can trade $8 million worth of volume, which is not very hard, by the way, because a $100,000 trade on 10x leverage in and out. So you open the trade. Well, as soon as you open the trade, you just traded at $1 million volume. You do that 8 times, you did $8 million of volume. You will receive $5,000 bonus, and you will only pay $3,200 in fees, which means that you'll earn, of course, the difference between those two factors. So use the link in the description below if you do want to claim that sign-up bonus. It is there. You can run a delta neutral position, 1 long, 1 short, take the free money, and then use it however you want. Okay, so easy, no risk on that if you do delta neutral. All right, if we look at Bitcoin dominance, still trending towards the upside over here, definitely nearing its end over here. We're waiting just a little bit longer, a little bit more of a push. Maybe we get it into 2.23%. We'll keep an eye out on that. ETH BTC as well, grinding into this low region. I do want to spend some time looking at altcoins. I also do want to help those of you who are down significantly, because it is a recurring question that keeps coming. What do you do, right? You're down 10%, then 15, then 20, 25, 30, 35, 40. When do you cut the position? When do you exit those trades, and what should you do? Well, here's some sound advice for you. First things first, you need to understand what I call the drawdown death trap, right? The drawdown death trap simply refers to your inability to cut those positions. You freeze like a deer in headlights, right? And essentially the truck comes and bang, that's it. It's over, right? So you need to have the ability to cut those positions. Understand the deeper that your drawdown goes, the more impossible it is to get back. Like, have a look at this, right? In this zone over here, it's still okay. You've lost 5%. How much do you need to get back to break even? You don't need 5%. You need 5.3%. If you go down 10%, you need 11.1%. Still okay. You go down 15%, you need 17.6% just to recover the loss. Now it's starting to look a little bit different, right? These numbers are not that close together. 15 and 15, right? 15 and 17.6. It's starting to spread. 20, you need 25% to get back. You go down 25%, you need 33.3%. And this is where things start to jump exponentially, right? You lose 30% of your account. You don't need 30% or 33%. You need 42.9%, a significantly bigger trade just to get back to break even. If you have a look at this one, this will really help it hit home, right? 50% loss means you need 100% gain just to get to break even. I know that the psychology is when you think about it really quickly, you think I lost 50%, I just need a 50% trade. No, you need a 100% trade just to get back to break even. That's very, very important. So typically you want to cap your losses somewhere within this region over here, which is why we say calculate your risk when it comes to trading, right? Calculate your risk. You need to understand how much your position size is and how much you're committing into a trade so you don't lose too much money. We discussed this at length throughout this Whale School workshop that we've been doing, or the Whale School sessions that we've been doing for those who have signed up. For those of you who do still want to join and learn more, it is open not for this cohort because we've already begun, we've closed the doors, but for the next one, use the link in the sign up or use the link in the description below. Sign up. It's totally free, guys, not 1 cent. All you have to do is click the link, click sign up, and you can join. Now, I do want to talk a little bit more about this, the drawdown death trap, right? The reason this is important is because you need to know when to cut losses. But the problem is some of you are already sitting within this region, 40 to 60% down. That means that you need 66.7 to about 150% to get back to break even. So what should you do? Okay, what should you do? The best thing that you can do right now is start to cut some of those positions and move them into coins that are strong, because the coins that are downtrending right now are likely to continue to downtrend, and you're going to find yourself further and further down this list. So you have to make the tough decision. You don't want to try and trade this. You don't want to be like, I'm going to cut it now and see what happens, wait for prices to come a little bit lower, and then I'm going to jump back in. You want to do it immediately, right? You want to cut the position and then instantaneously move into the next strong trade. So I'm going to show you what some of those strong trades look like in today's show. Smash the like button if you do want those, and let's get into it. So, TON, right? I do want to talk about TON first as well before we get into the strong coins. TON coming into absolutely critical level over here at 450 based on the trajectory of this move, based on the way the candles are forming. To me, it looks more likely than not that it's not going to hold this level. And that means the next level is the target that I've had for a very, very long period of time, which is $3. I think price is probably going to drop down to the $3 mark. That's where I'm interested in getting a bit more. Okay, other positions or coins that at least are strong as per 𝗓𝗍 over here. You have Solana breakpoint coming up. We're going to have a look at the Solana token. Leading into this event, what we've seen previously is price surges, right? We had 68% surge in price on Solana in 2021 leading up to the breakpoint event. The conference, 42% increase leading into the 2022 event, 58% price surge leading into the 2023 event, and now, of course, we're coming into 2024. So here's just some analysis if you want to have a look at that. That's what the chart looks like leading into those events. Between this gap over here, big dip, price leads up into that, right? Here's another one, big dip, price leads up into it. Here's another one, big dip, price leads up into it. Let's see what happens next. Let me know in the comments what your thoughts are. But as also Invest Answers suggests over here, he's been showing the pre-conference rally is kicking off. If you simply measure Solana against all the other coins, although the market is down, Solana is down less, right? The percentage changes over here are, just below double digit against most of those coins. So here's your Solana chart. Price coming down into these levels. It's one of my core positions. This is something that you can consider if you are cutting weak positions, moving them into something like this. Let's get an idea. If you're down, you need a bit between about 60 and 150% to break even on those trades. Well, back to the top of the range already gives you 68%. Break above that and things will start to look good. Other coins that I'm looking at over here is SUI, right? Capped between this, what's potentially a parallel channel that's starting over here. I'm also viewing it over here as the possibility for maybe a little bit of an inverse head and shoulders. So you have your left shoulder, your head, maybe you're forming the right shoulder over there. I think that's one to keep an eye out on. Let's have a look at how Casper's doing. Casper approaching the key levels. I'm looking to possibly accumulate a little bit more Casper coming into the zone. I don't want to get too greedy because Casper usually moves very, very quickly, but watching somewhere within the zone leading into the mid-range level, that would be as low as 14 cents. I do believe these are some of the strong coins, right? Other ones that are noteworthy to mention, let's go have a look at HNT, helium, right? This one's been on a tear lately. This one's showing signs of strength against the rest of the market. Let's see what the chart looks like. So this was dropped for whale room. Now, giving you a sneak peek of a free trade over there, you can probably start to reduce the risk on this. We are in profit on this, so you'd be entering late. If you want those things first, jump into whale room. They're always there. But essentially looking at this trade to move all the way up to $11. And this is one that's been showing signs of strength, right? It does have some key levels to reclaim, which is why we're taking profit over there. If you can start to break above this level, you really open up the possibility to get moving in a big way. Next level then becomes 28. So to give you some perspective, this trade alone would give our traders in whale room 56% move. If you take it from current entry level all the way to where I think it could go, that's about a 271% move. Another one that we're looking at is 𝗕𝗬𝗟𝗏, right? 𝗕𝗬𝗟 mind share and sentiment is now at record highs. You have Trump integrating his project in with 𝗕𝗬𝗟𝗏, buybacks, the Sky partnership happening. So let's see if this momentum can actually continue on 𝗕𝗬𝗟𝗏. Here's a chart analysis, of course, from Night over here, Crypto Night, coming from a long-term reaccumulation level, starting to break out. We can have a look at the chart over here. Let's quickly go to 𝗕𝗬𝗟𝗏. Is 𝗕𝗬𝗟𝗏 still holding up over here? Is DeFi back? That is the question. Is DeFi back? Well, theoretically, this is reaccumulation, high highs, high lows, still looking bullish. And as long as this can continue to hold above, I would say to be a little bit more aggressive on the entries, about 100. As long as it can remain above 100, it's gaining acceptance above the level. And that's the question you always ask. Did you gain a level or lose a level? If you can gain acceptance above this level, you can look for expansion higher. And then the targets come in as high as about 250 from current levels over here. This would be 91% move. Have a look at the coins that have a less or at least less of a bear market suppression. So they haven't been hit that hard. This is a lot of selling pressure. So 𝗕𝗬𝗟𝗏 is one to look at, but I don't think it's the one. You want to cut your positions and move into coins that are showing strength and that have shown relative strength throughout the cycle. I think the most notable ones are going to be the likes of Solana, Casper, and then I guess maybe we can give some special mention to 𝗬𝗍. Let's see where TRX is. Is it still holding up or has it come back? So TRX, we said, watch for this zone over here. This could break down all the way to 14 cents, right? So from top to bottom, quite a sizable move, dropping 15.3% off. If it does form a high low over there, then TRX or Tron becomes an opportune zone. If TON comes to $3, I think this is one to look at over here. So watch as this one comes down into that zone. Okay. So that is 𝗕𝗬𝗟𝗏. That is basically what I would do. That's what I'd be looking at over there if you do want to start to rebalance your portfolio. Another key mention, which we discussed, of course, in the Whale School workshops, and I do want to share that with the rest of you, is questions around portfolio structuring. We recently just spoke about when is the best time to build a portfolio and what a portfolio should look like. Again, if you want all that information, it is in the live workshops, but I will tell you that I think that holding a more concentrated portfolio is going to bode you much better leading into the final phase of the bull market. You ultimately want to be holding about 4 or 5 coins that form about 80% of your portfolio. You can hold a higher number of coins, but about 4 or 5 different coins should be the bulk of your portfolio. And then the last 20% can be, home run hitting coins, right? You're not looking for singles on those. You're looking for home runs. So that's it. The links are in the description below if you do want to check any of these things out. I'll catch you all on the next show. I hope you have a great one and cheers for now.